What's going on, guys? Welcome on into today's session, the first day of trading of the month of October 3rd, 2022. And we are starting off with a pretty green day across the board. Tesla is down pretty substantially with some subpar delivery numbers that we got over the weekend. But outside of that, IWM, small caps up 3%. The S&P's up 3%. SPY just going straight up here this afternoon. Look at that massive just melt up type of move, almost looking like intraday. And then QQQ's up 2.75. So some big moves across the board, pretty big reversals in bond yields. We'll cover that stuff. We'll cover TLT. We'll cover all that good stuff here in just a second, but we're getting into it. So first things first, for those who are jumping in after the fact, in the chat, there'll be a pinned link. It's also going to be linked up on the community tab on the channel to the Discord. So I finally put this together. We got a bunch of different channels here. What'll happen is once you hit the link, you'll come to, I believe, the welcome page, something like that. Just go in here and hit this blue dot. When you hit that blue dot, you'll be given the member role. And so then you'll be able to access essentially everything else in here. The resources tab will be only as a view only tab, but all the other channels will not. You can talk and whatever you want to do in there. And that'll be great. So, we kind of section things out a little bit just to make it a little bit easier. But the resources, I put a bunch of things that I have kind of started with there. Those by no means, they'll get built out a lot more. So over time, we'll build things out as, I see more things, as people put, or give us some more ideas or are sharing some good stuff in the other channels, and we'll add those over time. That's the plan. But it's the text channels that'll all be available to you once you go to the welcome section, read the rules. I mean, it's pretty straightforward stuff here, and then go into the welcome section and hit that blue dot, hit that emoji, and then you'll be granted them. You'll be able to see and view everything. Your name will be under a little blue text, and you'll be good to go. So that's that. But hopefully, we'll talk a lot of stocks in there, and it should be a lot of fun. So with that said, let's dive right on in. What's going on, guys? Tesla looking like a buy. What's up, Flippa's in the house? The secondary account, run up those likes, right? Run up those likes on both accounts. But yeah, Tesla this morning was where I had a little mistake here on Tesla. Not a mistake. I just had a trade this morning that I took on the main account, but only have only 3-day trades, I guess, because it's not a margin. It's not a cash account. And it stopped me out as we broke down below this little zone. So I was looking at, I'll go to the 1-minute chart so you can see it a little better. It held up pretty nice. The problem was that at this time of the day, it was one of those, wasn't a huge, massive, loss. I respected the risk pretty well. The problem is that at this time of day, the VIX was coming down, and as the market was actually pushing up. And so Tesla was kind of trying to balance, and it looked okay for a bounce off this this 245 zone. And we got a couple of bounces off there. We had, one nice move there, a second move there to VWAP. VWAP ended up being the rejection point. So it is what it is, but it has, and you're noticing across the board, as a lot of, or as the VIX comes down, you're losing some of the volatility that was being priced into some of these options. So they are not really moving maybe as much as you would have thought, given that we're up a lot today. If you had calls or whatever, or even if you had puts, you're getting kind of blown out because VIX is coming down and it's going against you. So you can kind of see that's something to pay attention to. And Tesla, it's been doing its thing. It's testing view up again right here. I had a small account short on it as it broke down below this zone. So once you kind of have established some levels, and I'm finding that the cleaner trades happen to be on the small account way later in the day. And so I kind of trying to give some time, because what I did on the small account trade was I took Tesla puts as it bounced back or broke down below this 245, sorry. And then it came back up into this area right here, and I was looking at, okay, prior support now becomes resistance. If it doesn't end up becoming resistance, no big deal. I'll stop out at the top of that zone if we got back up to, let's say, 246. We did not. We flushed out, and I took profits on this move down here. That was it. I actually had a trailing stop loss that I ultimately ended up getting hit some point in here, so I could have made a little more, but still was a profitable trade. So that was the deal on the small account play today. And yeah, we can actually pull it up. Let's see if I can pull it up. So first day of the month is green. Can't complain on the small account. $14. Could have been like 30-ish if I had, sold at the best possible time, but I put a trailing stop loss. Ultimately got hit, so it is what it is. But yeah, so I was looking and I entered those Tesla puts as we broke down below this zone and we were starting to reject up into that level and looking for that to be an area that was a prior support to be resistance. And we ended up flushing out a little bit lower. Nothing crazy, kind of a smaller scalp play, but that was it. So at one point we're up $33. I guess that was the peak, and I ended up taking the gains at 14 on the trailing stop. So it is what it is. It could have been a little more, but can't complain on that. And so we'll see if we can run this month, at least do a little better than last, is the idea. But we're still in this testing phase. The dollar amounts, I don't really care. We're just really looking to try to test things out and build up the data, which I've been saying. It takes time when you're only trading one a day. So that's what's going kind of a pain. But I have been running up the paper accounts a bit to test, just to get more data, just get more reps in on the option day trade side of things. But that's what we've been doing as of late. So Tesla's testing that VWAP right now. SPY is making a new high, or it's about to make a new high right here. You kind of have, like we said, and this is the day it looks like you're going to get it. Maybe this is going to be extended further. Who knows? But today is one of those days where, the writing was on the wall. At some point it was going to happen, and today it ended up happening, where you had a big move up off the open, a pretty big gap up, and then it was a gap and go. He pulled back a little bit into the open, but look at this, just holding above V. We talked about this last night. On the streams, holding above VWAP all day. Once it got above, the morning is going to be choppy, but once you clearly make that move, you get above. We didn't even come close to VWAP this afternoon. We got, I guess, kind of close. We didn't really break down below. And then look at that massive extension to the ups. That's a pretty big move. We're up 3% today, and dare I say, the next hour could be closing in on 4 if this thing really kind of wants to keep going. It's just, it's obviously it's a pretty bold move, but why not? Why not get up to the top of the range of last week, up towards this 370? I mean, 370 was the top of the range of last week. We got some pretty interesting action at that 370, and it was a resistance, pretty strong resistance at that. Gap fill up to about 374 on SPY. So that's the first target to keep in mind in terms of upside from here. Like substantial upside, it's that 374, I get 375, rounded up. And then if we break above that and hold above that, that's going to be constructive. That's going to be a positive, look. If not, though, that's going to be your area to watch as resistance. So that's the key. So you break above that until it's proven otherwise. That's going to be your resistance level until proven otherwise. And then beyond that, up towards 380, low 380s, and then 390 is going to be your next spot. So I can start to extend some of these lines over, these boxes over, these zones that we're looking at, just because now they become a little more realistic as we get closer to those areas. If we break this first one. But of course, until proven otherwise, this is not an area to get super excited about. We had a pretty big move down on Friday, so you've recovered some of that. Yeah, you're above Friday's, highs. Cool, great. But, you're still not back up. You're getting up towards the high of the range of last week, so that's great, but nothing, crazy yet on that side of things. Managed to free up about 300. That's nice. I'm telling you, if you can do that consistently, even if it's $50 a month, I'm seriously, it doesn't matter, and just consistently put something or cash flow something into a longer term or a longer dated account. That's great. And the way I did it early on was on the small account, right? Always having some money to put in. And when I started the account in college with like $300, I started off, I lost some money, was down to like $200 at one point in the account, but I was like slowly adding, $25 a week if I could from, part-time job here and there, $50 a week if I could, if I had the money available. And it helps because, you're going to go through that learning curve. And so now you at least are not going to get super discouraged that, oh my gosh, my account just keeps going down. Now I got to make up all these gains. And then to get to green, it's like, it seems like such a daunting task. When you at least know you can consistently put in money, you don't really care about what happens tomorrow, or at least in the short term, because it's all about, right, it's learning and figuring out what's working and what's not working. Google, JPM, Realty Income. I think those are all decent, unless obviously real estate, or unless the market gets destroyed, next year or later this year. These are some decent buys, I think, on a lot of these names. Solid names, if we're looking at crap companies, who the hell knows, right? But on solid names, Call for Amazon. Yep. I mean, short starting to get squeezy. Yeah. I think based on what I have seen, based on some of this, and I was even starting, I dived through a lot of sentiment on Twitter just to kind of get a feel. And this past weekend, I mean, you couldn't find anyone thinking anything positive about the markets. And I mean, for good reason, right? Think about it. We closed at new lows. I mean, SPY, go to the 1 day chart. I mean, now today it reverses up, and maybe tomorrow completely reverses right back down for all we know, right? But on Friday, it did not look good. I mean, we're down here making a new low on the year, closing at the lows, aggressive selling, or at least accelerated selling into the close. It didn't look good, you know? So no wonder. I get it. I totally get it. But when everyone's on one side and when everyone's expecting a big flush out, do we usually see that? Generally not. When everyone's, when everyone's all bullish, do we generally see the stock or the market continue to rip? When everyone's on one side, generally no. So, that's kind of the name of the game in terms of psychology, just playing out. You're seeing it play out. Now, in terms of technical levels, all that good stuff, you look at people who like to look at the Elliott wave. There are all these different things. A lot of people, and, until proven otherwise, are expecting that we're going to rally a little bit here, and then we're going to hit up to one of these spots, 375, 380 or 390 on SPY, one of those levels, and have a failed rally and then reject off there and go lower into the end of the year. Makes sense. I get it. But a lot that's the consensus view. That right now, that is the consensus view. For people who let's say you're looking at your charts here, your theory over here, that's the consensus view, right? So it's going to be interesting to see how that develops, changes over time. Does that consensus start to turn if and when if we continue to rally? If we start to rally up to, let's say, 375, break that, 380, break that, get up to 390 on SPY in the next week or two prior to CPI. Obviously, CPI on the 13th, I believe, is the 13th of October. That'll be pretty key. Let's see if I can pull up a CPI release. Let's just confirm that date. October 13th. Yep. So October 13th at 8:30 a.m., which is, if I double check on my phone, what is that? October 13th? That is a Thursday. Next Thursday. No, that's actually getting close. So it's next Thursday. So I think the reality is that a lot of people think that, the rally will sustain until, maybe mid next week. And then at that point in time is when you're going to have, the next catalyst, and many are expecting it to not be good. I could certainly see that, right? There's a lot of reasons to believe that. But at the same time, it's a gamble, right? If that number comes in, anything constructive in terms of, seeing inflation come down, that rally can easily sustain further. So we will see, but that's what you need to be paying attention to the next 2 weeks. Meanwhile, look at this, SPY new highs, IWM 170. Man, I'm going to get rid of this. I have been playing on a paper account just to get more reps in terms of playing some more day trades. Only the reason why I would do it on the main account, the problem is that I'm just kind of locked in terms of my positions. I can't turn the account to cash until I liquidate everything and then have it sit for 6+ days. So I guess I could in theory do that right now if I really wanted to. Not going to do that at the bottoms of a lot of these, or at least at these crazy oversold levels. So, we get a decent bounce. I'll be taking profits proactively and then looking to roll some of those into Robinhood, some just pull out safety wise, and then the rest of it keep around 10K ish in the Webull. Ultimately I want to turn it to a cash account and just start running up that, or at least playing that account, more, day trade wise instead of, swings. No, pretty much no swings. Maybe some very, very, very short term overnight swings, but that's really it. Very small. That's the plan. So we got to get to a point where I'll be away in November for a week or two. So that'll be the time to do it. So I'm going to be probably waiting until then. So in the meantime, running the paper account, just getting the reps in is all what it's about, I think. And a lot of people, really don't do enough of that, to be honest, either, because there's nothing wrong with if you run out of money, or you're at the point where hey, I'm done trading for, I'm done with the quality setups. I'm going to play. And if I still see something, maybe I know in the afternoon is not the best time for me, but I might take it on the paper account just to practice some stuff. And you'll get a good feel of what the hell is working and what the hell is not working pretty quickly in doing so. So $500,000 a month. That's nice, man. I mean, if you can do that, this is the time especially to do it. Again, who knows if we go much lower, and it's, even if the world ends, right? Not the world end, but if this system collapses, It'll be good. It's a buying opportunity of a lifetime for those of us right now, right? Who have the time horizons to be around for the next 30 years, If you're obviously if some people who are at retirement levels, it's scary because you don't know what's going to happen. And you're concerned that what if we see big pullbacks in the next, decade or so? Can you afford to weather that storm? Some may not. That's the concern. So everyone gets to a different stage at the end of the day. Like I said, a bunch of recurring buys. Yeah. I mean, even like a few dollars a month across different stocks, whatever the number is, build out the positions and do it in quality stuff. Or if you don't know, then do it in an index fund or do it in an ETF that covers the total stock market. SPY, QQQ, those are two solid plays right there. Market is so good today, it's boring. Yeah, it kind of is. It's been now we're getting a little bit of action here on SPY, a little pullback, but even this, probably gets met with some buyers. I mean, the way it's been kind of just blowing just straight to the upside. So we'll see if we jump over here. See what's kind of interesting. I guess my TQQQ position is up 30% today, I guess. So we closed the week down just under $1 last week. My average is at 130. It's coming up to 125 right now, so I'm pretty almost flat on that position. But I look across the board, Labu. Let's see. Yeah, Labu's up. XBI is up 1% today, so that's not bad. It wasn't as strong, but Labu is interesting because I was looking at some of these options, and while it's up a couple percent, we were trading around the same closing price as Friday. Right where we are right now. And why is that? Some of these contracts don't have much volume anyway, but some of the not some, but you're getting a pretty big hit with the VIX coming down. This Soxel position right here is really interesting because I was thinking about this and I was saying to myself, even though it's an out of the money for February of next year, the reality is that if you get a string of days together, right? For example, these options, no one wanted to buy. If you're looking at out of the money options on cross, growth names or whatever, or either ETFs, Soxel 3X ETF on SMH, the semiconductors. That's been destroyed. No one wanted to buy that crap. No one wanted to buy that, right? But you think about some of these moves, 40% today alone on this option because it got just essentially pushed down so low that it's no one's buying this thing. I grabbed a few last week. This thing pops back up over one in the coming days or week or so. I mean, I'm going to be trimming some of that off, but just managing at least what I have for now. Outside of that, TLTs, the TLT. Oh yeah, let's jump over to TLT. This position is almost flat on that position now. This is a March position that I have on TLT. Let's jump over to this. What are we looking at on the TLT? It was up a little more today. Now it's down. But the thing that's notable on this, TLT is kind of, it's a 20-year Treasury bond ETF. The 10-year yield, look at the 10-year yield, down almost 5% today. It was down more too. Here it is loaded up. It's bouncing a little bit off of the lows of this morning, which came down to under 3.6%. Now it's at 3.66 roughly. But look at this move on the 10-year. Go back the past month. I mean, we had been in this channel, this very, very controlled move to the upside on the 10-year the past month and a half. And then really as of late, we had that blow off move to the top. Now, if this level ends up holding as the top, that was your blow off move from at 350 to about 4%. And now you're kind of cracking down. So we were talking about this last night, saying to ourselves, okay, let's see what happens here. Lower high, lower high. So far, so good on lower highs, right? This is kind of your trend for now. So it's well under that trend, but it can still come back up to 3.75 or even a little more and establish a lower high here. That's going to be kind of an interesting spot. We'll see what happens, or if it could just continue to kind of crash down lower. But for now, it's still up over 3.5, which is still nothing, to get super excited about until it really breaks below 3.5. I think that's going to be kind of your key spot. That was a nice area that it, struggled to break out. Resistance here, support there. Also was your highs from June. So we'll see how it handles that area. If we get a test of that this week or next week, the next big catalyst is going to probably be the CPI next Thursday. So be really good to DCA. Yeah, I mean, 100%. I'm looking to start building out that position in JEPI soon when I have some cash to free up a little bit. This is where I think this is a stock. It's obviously doing good today, but this is a stock that I want to probably be in I mean, next, 5, 10 years in a rising rate environment, let's just say that we end up, rates just generally speaking, are going to be elevated over the next, couple of years to maybe decade or so. If that's the trend, we're breaking out of this like massive, 30, 40 year, cycle of the 10-year just going lower and lower and lower, right? And so if this is the trend and we're finally breaking this trend on the 10-year, and now it's going to start to kind of make these higher lows and whatever it's going to do, right? We start to kind of make that move up in the next couple of, next like decade or so. The growth names that have done so well over this span from like the 80s all the way through now for like 40 years, right? Are not going to do, they're not going to, there'll be names in there, like you talked about, there'll be names, they'll do fine. Right? There'll be some great names. But if you don't want to, or you're, kind of concerned about picking individual stocks, having a nice, broad exposure to less risky or more solid companies, let's say less riskier, companies, is where I kind of want to be. So that's the idea of the whole JEPI, position that I want to be building out into the Robinhood portfolio. Ideally, that's going to be 50% JAPI going forward. Once we kind of solidify, or again, that's a bold term, I guess, in terms of the market to slow down this, to calm down, relatively speaking. Who knows when the hell that happens. As we calm down, that'll be a pretty core position, and then we'll have about 25% for the growth names if I wanted to be in more growth at times, and then 25% would be more of a swing thesis type of trade. Let's say it's a couple different stocks, or right now in this case it's kind of a bond swing, a TLT swing, or a TMF is a 3x ETF. It's kind of that situation. So that's what I want to do in terms of breaking that account up into pieces, going forward. That's the plan. So UN calls on the Fed, other central banks to halt interest rate increases. Interesting. Very interesting. The thing is, as we've been talking about, here's what we've been seeing. Let's look at SPX to get a better kind of look at this right now. It's a pretty big move off the bottom too. The thing is, it's one. Here's where I think the narrative may shift in the coming weeks. It's that the Fed is going to be the Fed can talk all they want, and they have been very, very, set on talking the market down, right? Set on talking that we're not going to stop hikes. And again, part of that is to really kind of set the expectations to get people to stop, to kill demand, to not kill portfolios, but to just drop people's portfolios down a bit, so that, okay, now inflation's not going to be, running wild. If people feel like they don't have as much money, they're not going to be as, aggressive in their spending habits, right? It's a psychological thing too, part of it. And so it's not something that's going to last forever. Number one. Obviously, if in a broader scale, the financial system is experiencing many pressures and starts to break down, that's a different story. That'll be, much bigger downside that they obviously didn't intend anyway. But you can kind of see how this can snowball. But I think the narrative shift may be that, hey, the Fed kind of has no choice but to slow down, or at least not be as tough of a talker as they may have been, because of what's happening. And you're seeing it over in Europe. You're seeing it in other countries. You're seeing these countries that are taking some substantial hits, that have major problems going on in terms of their own financial systems. And a lot of that stems from what the hell is going on here in the US, because as we raise rates, that's putting a lot of pressure on other parts, on other systems. And you see the dollar strength. There's a lot of concern. There's a lot of concern about this. Now, the dollar is pulling back now a little bit, so we'll see if that continues. But the Fed can talk all they want, and I think that that's what they want to do. But what the Fed is saying versus what they're going to end up actually doing over the coming months could be two different things. It's something to think about. And it doesn't mean that, oh my gosh, they're going to stop raising rates. But there could be other things that are done to kind of support certain systems and to kind of minimize the potential damage that can be done, that they are potentially doing across the world, to the global economy, and to the economy here. You're going to see a lot of things. You're going to see a lot of things, you're going to see, as we've been seeing already, things that are not looking good. And I don't think that's going to stop. And the Fed, I'm sure they know that. I'm sure they're well aware of what the hell they're doing. It's just that they kind of have to still be strong until that inflation number comes down, because they have no credibility until it comes down. They have no credibility until it comes down. Mortgage rates in the UK are going crazy. And the thing is it bullish? It's bullish because you kind of have a backstop. The reality is that there's kind of a backstop almost, in a sense. And while people are like, oh my gosh, don't fight the Fed. Well, yes, the Fed can talk a big game, but what is the Fed actually going to be doing under the surface in the next 6 to 12 months? That could be a different story. And so if that narrative starts to shift, there could be some safety, or at least some feeling of security to buy back in for all the people who are in puts and people who are on the sidelines in terms of money. So that could at least regulate things a little bit. Something to think about in terms of, the crash scenario, which could play out, but realistically, it's going to take time, I think, for that to play out. And I think that would probably occur if we really saw major deflation into next year, and we really saw the effects of what the Fed has done into next year, like really hurting the economy, destroying earnings. Like, that's not going to be something I'm super concerned about right now. Yeah, earnings are not going to be good this next cycle, but I don't think anyone expects them to be good, number one. It's going to be into next year. Like, how bad does it really get? How does that unemployment rate look? Are companies laying off left and right into next year? Like, how bad is it really going to get? And that's going to ultimately be dictating, I think, a lot of where this thing wants to go next year. They want to prevent a really bad recession, I think. Yeah, they want to get. That's the thing. I think that you're going to have to weigh that. You're going to have to weigh, again, if the GDP readings coming in, other aspects of other data coming in, that's showing, things slowing down a lot. Used car markets, housing markets, that has done a ton of damage. I mean, that is insane. If you look at the 30-year mortgage, the 30-year bond just in here, I mean, it's nuts. This 30-year bond is at 3.7. 30-year mortgage rates are up near like 7%, something like that in the US now. It's like insane. The 30-year bond, if you jump back to all time, let's see this chart. I mean, this thing was down so nuts. Now you're talking about this thing back up over levels that we haven't seen since, you got to go back to 2014, and only briefly prior to that, back to 2010. So there's going to be a lot of damage. Housing market is going to take a lot of hits. As we've already been seeing, it's not going to stop. So again, the whole rush to 2% inflation, how serious is that going to be versus like, are they okay with, maybe getting down to, sub 5 and then being like, hey, well, let's kind of cool things because we have other major problems that we can't afford to have, unravel in the economy. I don't know. So we'll see, but that's kind of the thought process and the look into next year. I don't think it's something that they get super concerned about everything just unraveling and breaking down until right now, like everyone's saying, but I would say anything could happen. Let's check in here and see how this is shaking out. Put call ratios, fear and greed. Put call ratios are going to come down a bit, I'm assuming. Yeah, they're down to now. The 5-day average is down to 1.01, which is kind of interesting. We'll look at the VIX here in a second too, but look at this. Look at the put call ratio for today. It's finally coming under 1. So the put call ratio for today, I know this is like tough to see, but at one point this morning we were down to like a point, just under 0.9. Now we're at a 0.947. So for every call that's being bought, or for every put that's being bought, you have 0.94 calls. So that's kind of the deal. No, sorry, 0.94 puts for every call. Sorry. Over 1 is more puts than calls. This is now more calls than puts, but barely. We're barely there. And on average, though, in 0.95 now, on average, this is a number that you see at around 0.7 across just longer term, big picture averages. Period of time seems to be a good time to be long. Reminds me of that time. I mean, and that's how it's going to go. You're not going to know until you look back, right, on this situation. But if this is a bottom, or if we're bottoming soon, right, things will play out over the next 12 months that ultimately will put this bottom in, right? If it's going to be the bottom, there'll be things that maybe we don't realize now that'll start to move. If rates come down, maybe the dollar strength kind of pulls back. Maybe the CPI comes down next couple of months. Like, all these things are things that we don't know right now, But like looking back, you'll go, oh, yep, that's why we bottomed. Things turned around, or this happened. The Fed said this happened. Some, who knows? But that's what you're going to look back in hindsight, whenever that bottom is, and say, yeah, here's why. Essentially, we bottomed. So easy short. I mean, I would be really interested to see how that plays out in terms of the short side of things. If this thing does want to try to rip a little bit. Because I think a lot of people are looking at that and saying easy money short. Again, not right now maybe, but I think if we get up to that 375 on SPY, 380, 390, those are going to be your next key spots. Let's just extend these boxes too. Those will be your next key spots. And, I think a lot of people will be looking to short the market there. Those three levels. First level, maybe not as much because, it's not that big of a bounce. But the next level and the next level, yeah, 100%. That is what they're going to be looking to do. Was down 501 account. Now I'm only down 250. Look at that. So, you know what? Coming back, man. Coming back from the dead, right? TLT is kind of breaking down a little bit more here. I think the bottom, from this move down to just north of $100. We'll see if it can build higher lows from here, but that could be an interesting low to keep in mind on TLT. What else was that? Outside of that, oh yeah, I want to look at the VIX. Take a look at the VIX. So the VIX is under 30. We got down there on Friday actually briefly, but at one point on the highs. So let's see if the VIX can hold. I mean, it's still got to break down a little bit. I think under 29 is a little bit more of a notable level on the VIX based on how it handled Friday. So if the VIX ends up breaking down from here, let's just look at this daily chart on the VIX. You probably have room to come down to 28, 27 pretty quickly. And then beyond that, maybe down towards 25, 24, something in here could be a realistic spot for a VIX reset before the next pullback, or we'll see where things end up playing out from there. But that's going to be an interesting spot on the VIX to keep in mind. Also, too, with this VIX, everyone wants this breakout over these highs to 40 plus to put the bottom in. There's no guarantees. There's no guarantees that that's going to happen. I wish it was like, oh yeah, the VIX, no bear market, all the sayings, no bear markets ever bottom the VIX under 40. It could though. It could. Thinking like that, right? And the VIX has only been around for, go back to how many years. Thinking like that is thinking that what's going to happen next, right? That's what you're saying. Like if you're going to say that we aren't bottoming until this goes 40 plus with certainty, and you're going to position yourself that way, that's positioning as if what the hell's going to happen next, which I think many will find over time that that's not the best way. And that might be an interesting way to play things when you're, forecasting or whatever. But in terms of making money, which is right, that's probably the goal for most people, I'd imagine, not just kind of predicting things. It's making money. That's not the mindset that you really want to be in. I mean, I've been there, done that, still, still have the same battles with that all the time, right? You think, oh, I think this is a good spot. Well, is it a good spot based on your risk reward, based on, okay, if this happens, what will I do? If this happens, what will I do? So, sold some Labu puts today. Nice. Yeah, I mean, this is where is Labu at right now? 7-ish, 725. Bounce a little bit. It's up 3%. The XBI, let's look at XBI because XBI is the biotech ETF that we play Labu off of. XBI over $80. It's kind of building higher lows. It was actually red at one point today, I believe. But yeah, here's the chart for XBI. I mean, I have a couple of different zones that we're obviously keeping a good eye on. I think it's gonna struggle, in this low to mid 80s. But if you can get out of this, over 85, 86, get over these indicators, the 200 moving average up here at 86 almost, or 85.50, and then the 50 SMA at 85, just under 85. You get above 85, 86. I mean, this could be really looking good if we get up into this area. You get up into here, I think that there's a very legitimate shot to make a test to those highs. Obviously, you need market to support you, right? But this has got some relative strength versus the S&P, which is great to see, meaning that, hey, if we see some even more strength across the S&P, this could have a couple days like it did, back here end of June and into August. It strung a couple days together where it just ripped face boom. And that thing went, what is that, like $20 in a matter of like 5 days? Pretty crazy move, 40% move or something like that. Pretty crazy. So we're going to see what happens there, but I do like that, this as a sector that's actually been pretty strong. And hey, it's taken the brunt of the hit already. Took the brunt of the hit last year, and then obviously a destructive move, from November of last year to the first half of this year to June. But since then, what do we got? It's got some really nice relative strength versus the S&P. S&P made new lows. We didn't even come close. Nowhere near that last week. We were still about 20% off the lows, roughly. Right now we're about 20% off the lows on XBI. You look across the board, look at ARK, Kathy Wood and ARK. They didn't make new lows. They got close. ARK is about 5% off the lows, or 5 or 6% off the lows right now. Let's look at Apple. Apple bouncing right now, but last week or even this morning, Apple was, you're talking 6% from the lows. So there's some good relative strength in XBI. And as it plays out, you kind of see these cycles, the way that they generally play. There's no, nothing's guaranteed. Nothing's, has to be the same way. But generally speaking, small caps and growth names get hit first. And then those are the ones that bottom first. And, the S&P has made new lows where a lot of growth stocks haven't actually made new lows, believe it or not. When you would think that those have been super, super weak. If you look at a firm as an example, AFRM up 2% today. But a firm, made these lows in May. And it came down in June, July, didn't even get to those lows of May, came down a couple dollars shy of that. And firms here at 19 were the lows on the year, down low 13s. So again, relative strength on something like that too. Also, as I look at this stock, look at this. We got something juicy, I think, in the works here, maybe on a firm. Look at this little downtrend. Look at that. Swing action, a little swing position on a firm right here. Look at this. You're risking this level. Next earnings is not till November. You know what? As we're speaking right now, that's a downtrend break in the making. And again, if you take this pre-downtrend break, it's a September, trend, right, to the downside. You take it pre-downtrend break, people are like, oh man, you're gonna, never do that. I don't really give a shit about taking it, prior to the downtrend break or this. It doesn't matter to me. Because I'm looking at the risk as saying, hey, I'm going to risk this morning's lows. I'm going to risk $18. So if a firm's at 19, I'm going to risk $1 of downside here for where's my target? My first target's going to be right here. Right here. Volume node, higher volume or volume point of control also was your support back up in early September on the pullback. So what is that? If we do the risk reward analysis right now, if you want to go long right now a firm, you can play it with calls, puts, putting calls or shares, whatever. What's my risk reward? Does this make sense? It's a 3-to-1. I'm literally going to probably take calls right now because I'm looking at this and I like a firm's relative strength versus the S&P. And so we play a firm. As long as a firm holds $18, we're going to risk one right here, about $1, to make $3 of upside on this move, roughly speaking. This risk reward ratio is a 3.17 based on what I'm seeing right now. So that's actually really, let's just take a look at how these options are shaping up. And again, the VIX, there's some good things. It's not up a ton today, which is good. The VIX is also not, or has come down a little bit. So you're not buying the VIX at 40, which is good, or 35. It's down under 30, which, it could obviously come down more, which is going to hurt some of the options, but this is not a bad idea. What's the time horizon? I wouldn't want to hold this position through the CPI because that's a gamble. So, the CPI is next week. You can probably buy the 14th or the 21st. The 28th are probably safer, but you can probably go out with something like even the 14th or the 21st. Let's see what these options look like. Are they even juiced up? Let's take a look. If you buy like the 20 calls, you can buy the 19s, around 19. I think the 19 calls are pretty fair. Yeah, you can buy the 20 calls, I guess, too, or the 18 calls. Honestly, there's a bunch of different ways to play it. But I do like that. Let's see if the 21st is a little bit cheaper. If it makes this one might be a little better to play. The 18s on the 21st are going for like $250. The 18s on the 28th are going for like $280-ish. A little cheaper on the 21st. I might do that. But yeah, so you can see a firm like that's one of those stocks that's a pretty good risk reward. So here's the thing though. Like if you're going to swing, and again, this is a market that's, it's tough to swing. Like respect this shit. Like don't be an idiot. And we have been in the past and say, well, I still think it's going to be good because I still like it. as it kind of does this. Like you got to have a spot in mind. I'm cutting this shit off at 18. I don't care. Doesn't matter. Doesn't freaking matter, because that's the play. You're looking at the downtrend break saying, hey, when we get this downtrend break, you're probably going to have, a firm has the potential to have that, 3, 4, 5, 6, it's done, those 10% type of days. It's up 2% right now, nothing crazy. It has the potential to do, to do this entire move, make this entire move in a day. It's 12%. It could do that. It's done it. It's done that in the past. So look at some of these rallies, right? In one day, a firm goes from 23.70 to hitting up to 26.25. That's almost an 11% move in one day, back then. So downtrend break, you add a technical breakout to the mix. I think you got something to work with there. So I'm going to take that, and I'm not going to hold this past CPI, which is next Thursday. So there's no way I'm going to be holding it past CPI. So I'll go to the 21st just to give me some more time instead of in case it takes a little bit of time, but I really don't think it's going to take very long. You can even go to the 14th. Let's check out the 14th. 18th. These are probably pretty good too. Play the 14th. Let's do that. Because realistically, thought process here. A firm is a pretty volatile stock. Market's been pretty volatile. We're either going to break to the downside here, and you're going to get a break below 18 tomorrow or Wednesday or Thursday at some point this week, or it's going to break out and you're going to hit your targets pretty fast. So you're going to get either one of those things very, very fast, right, on this play. So that's the idea. Let's take that as a swing. Let's go to I'm going to play the October 14th 18s. Can I play 19s? I guess I can do 19s. They're a little bit cheaper. They're in the money, so that's not a bad idea. Let's take the 19s. Let's see. Let me clear out so you guys can kind of at least see my order entry. So a firm 19 calls for October 14th. Ideally, we get a breakout. We have a big day on the green side of a firm. This week we're out. That's it. Hit the target. We're out. You can have some. You can leave some to run, or you're going to risk that level of that $18 area. So they're going for about 156, 159. Let's see. How many do we want to grab? We have buying power. I think they're like $2,000 or so buying power in this account right now in terms of what's free. So if I was to get up to, let's say, grab 6, it's about $1,000. I'll take 6 contracts right here at the 158. Let's see if I get filled at 158. That's right in between. It's not a day trade position. Let's see. We're on the bid. Let's see if I get filled on the bid here. There we go. We're in. So now we're solid on that play. That's about $1,000. I feel pretty good about that. And realistically, the delta on that is about a 0.56. So we're playing in the monies or at the monies right now for a swing. What's the target? The target is going to be up around 2150 or a little over 20. When we get to 2150, we're probably going to scale out. That's the first scale. It's a 3-to-1 risk reward. It's a 3-to-1 risk reward. I mean, a beautiful potential play here up into that zone. Anything below 18, out. I don't care. That's going to happen, pretty soon, I'd imagine. Maybe we're going to get a breakdown or we're going to break out, and this is it. So that's the idea. Doubled up the likes, slip us back in. Appreciate it. Let's run up those likes, guys, because I don't ask enough, and it does help. It does really help. There's a link in the pinned comment of the chat is the Discord. It's free. For those who are new, it's been like, years that I probably should have been starting that up, but it is free and it will be free. Because I don't think that people need to be paying, $100 a month to have a community feature, right? Or to have a community they can talk about stuff and throw ideas around realistically at all. But, okay. So yeah, the delta is 0.56. Let's do some math here, right? So the delta is 0.56 on this trade, right? So if we get a move from here to that level, that's going to be about a $2.50 move on the underlying stock, okay? So a $2.50 move, I could probably pull up my calculator on the screen so you can see it a little bit better. Okay, let's do that. So, can I make this bigger? Stupid calculator is like pretty small. Okay, whatever. $2.50 move. I'll bring myself back up into the screen so you can see it. $2.50 move. So what's going to happen here is for every the delta was 0.56. So for every $1 move in the stock, okay, this contract's going to move 56 cents, and that delta will change. Okay, so in this case, if we get a $2.50 move, let's just say by the end of the week. Now there will be some time decay there. There'll be some volatility decay potentially as well. There'll be some decay in the options. Okay, if that move occurs by the end of this week, $2.50, let's just say about half of that, let's just roughly divide that by 2, around a 50 cent, because, okay, give it some time decay, expect some decay in the options, make that delta closer to 0.5. So you're going to get that divided by 2. You're going to about to have a $1.25 move on the underlying contract if we get to our targets. If it happens tomorrow, obviously we'll make a little bit more, or, whatever. That's the idea. So about a $1.25 move on the contract. Do the math on what the hell that means. Let's see. So from the average that it is, you can see how the risk reward can be pretty nice here. Yeah, 125 move would be up to 275, right? The contract would go about 75%. So that's the idea, 75%. And the risk here is you're going to risk about $1 a downside. So you're going to risk on these contracts about 58. Let's just say you're going to risk 58 cents. So on the contract, you're going to be looking to risk 50 something cents to make, what is that, 125 or whatever. So it's a pretty good risk reward on the contract as well. So that's just kind of how you want to back your way in. Obviously, I don't want to be playing anything that has a 1-to-1 or worse risk reward, So when you look at the chart on an option play like this, and you can get about a 3-to-1 on the underlying stock, that's pretty darn good on when it comes down to the option. It's pretty darn good. So we'll see. What trading platform for stocks? I'm right now using Webull. Like, this is TradingView. There's a link to that in the description box for like a free trial if you're ever interested to it. But I love this platform for charts and for like doing things like this and to kind of like mapping my trades out, because I don't like to trade, generally speaking. Like, I am testing different scalping strategies on like the small account challenge or whatever, but for the most part, I like swings or bigger picture moves. Like, I'm not sitting here like scalping like in 2 seconds out the next second. I'm letting things set up, looking for bigger zones to accumulate, zones to take profits, things like that. This is TradingView. This platform is Webull. There should be both linked down below if you're ever interested in them. But yeah, those are the 2 platforms. So we got the affirm calls for the next 2 weeks. Ideally, it's going to be a this week move, and we're selling that prior to CPI on the 13th. So we're going to sell it by the 12th. If it somehow was still holding over $18 on the 12th, somehow, I'm just going to cut it off. But I highly doubt it's going to sit at this price point and fluctuate in like a $1 range for the next week and a half. I highly doubt that. We're either going to flush 18 and get the stop, or we're going to break to the upside and hit that target. That's it. So, all right. So that's that. That's a nice little play. As we were speaking, I was thinking about that, yesterday, and I was like, this is not a bad idea to grab. Right now anyway. Again, and Affirm is one of those stocks that, hey, look, on bear market rallies, this thing has done very, very well. It has done very well. So last rally, it went, it had a couple different, days, and so we had a day where this thing hit new lows back in July, briefly in the morning, and then ripped back up to, it was a 22% range on one day. The stock move is pretty crazy. So she can move when the time is right. She can move. The problem is that I think right now, which is not a bad thing if you're a little early, the problem is that I think a lot of people are very skeptical, and it takes time to kind of turn that tide, right? Eventually the tide will go from people being very skeptical of playing any longs, right, to going, oh man, as we start getting, as the price action starts to go up, oh man, I'm liking calls now. Well, why wouldn't, again, I guess all that's changed here is price action. You feel a little better. You see some more green on the charts. That's all that's changed. Nothing actually has really changed, right? So, you're going to see a lot of that, right? Especially if we rally up a little bit off the lows across, Qs and SPY and stuff. So we'll see. But I'm expecting, people to start feeling a little bit better if we do rally. And that's the opportunity. If you think we're going to go down lower, that's the opportunity to go short. RTX calls for November 11th. Let's take a look at that. Raytheon, maybe. Yeah, look at that. That got hit pretty hard, man, since August. That's pretty nuts. I guess it got hit with the market pretty hard from that point, but that's a pretty decent, this looks like a decent spot, especially with what's going on, really across the world, right? Geopolitically, this is probably a decent risk reward play, right? Let's see if we can map something out here. Down to those lows. Yeah, it's probably a decent, well, as long as this zone holds, it's a decent accumulation zone. Down to about like $78 or so higher volume node there, down to like 78 right here, which we're kind of already showing some good, higher low strength anyway. So, I want to see these levels hold that we've made already established. But that zone looks like a decent zone. Sometimes you gotta bite the bullet a little bit. Interesting action here. I mean, look at across the board. Look at that. Tesla's still down 7%. Look at this. This got hit pretty hard. I thought with this, I was, surprised, to be honest, by this. Not surprised. Okay, they had bad news over the weekend in terms of they didn't meet their delivery expectations. Fine. Whatever. So, yeah, sell off. I get it. But I was thinking to myself, hey, if we get a rally today, Tesla could bounce back massively. And it did not. That's something to keep in mind. It did not. So it did not squeeze right back out, didn't, do that, which speculation that it could have. Apple, on the other hand, the heaviest or one of the highest, if not number one shorted stock in the market right now, had a massive day, 3.5%. So Apple would have been your squeeze out type of player. Actually, as we speak, look at this. For an intraday flag, look at this. Right now on Apple. That's your flag. You break out of that upside, you could have maybe a nice little move up to like, definitely a high of the day. Maybe break out over Friday's highs too. That could be a juicy little late day move if we get that breakout on Apple. But it's had a killer day already. So you're kind of trying to milk out a little bit extra here. If I'm, what's the risk reward? Is it great? I don't know if I'm a huge fan of that after already what's happened today. Maybe earlier, you played a little flag here or earlier. Nvidia's up 4% today too. That's another one that's been pretty strong. SMH had a strong day. Semiconductors had a pretty strong day. SMH is up 4.2%, which is good to see, I guess, at least in terms of some strength. The charts here, if you zoom out, they didn't look good. Finishing off last week, they did not look good at all. So you're going to have some stronger resistance up here towards 195 on SMH, but over 195, you might have a nice little, clear little runway to $200. So this could get a nice little bump back $200 pretty cleanly. And then, if the markets hold a little bit, and then from there, we'll have to see how the market reacts, how SPY reacts, QQQ, and where we're sitting up. And, if we get to that move by CPI, what does CPI come out next Thursday? And what's the next, bigger picture move across the board. So we'll see. But that's the idea. In terms of news, we had some earlier news this morning, I believe. But outside of that, I think it's been pretty quiet this afternoon. Let's see what the 10 year's up to. The 10 year is at that 3.66. So finally the chart wise doesn't look as good. It does not look nearly as good as it had on the 10 year. Obviously breaking down. Now it's actually at an interesting spot here. Look at this. The levels that was a support the past couple of weeks is now acting or potentially going to be acting as a resistance. We fell below that. So now you'd expect if we get further weakness here on the 10-year, a valid trade would be something like this, right? Something like that. Who knows how steep or how fast the move is, but a move back up into this zone and then looking for a short versus let's say 375 or so. And then for a move down, I guess you can play it a bunch of different ways. You can play the actual bonds, go long the bonds. You can go long a TLT, which obviously isn't the 10-year, but it's, generally going to do probably pretty well if the 10-year kind of comes down and yields in general come down. Let's look at the 2-year and check out the 2-year yield. Why is it not popping up? Why is this all wonky here? 2-year note. Why is it all being a problem? Let's see if I can pull up the 2-year. TradingView is giving us some weird problems now. I don't know, but I guess I should have saved. Probably should have saved the 2-year on this. I definitely have looked at it recently. Maybe I can find it in my history. Let's see. Bitcoin. I haven't looked at Bitcoin. I haven't looked at Bitcoin a little bit too. Come on. I definitely looked at this 2-year recently. Maybe not. Maybe she's just they took her off for a bit for whatever reason, or we can't see it. Okay, let's look at Go back to that 30-year we were looking at earlier. Let's see how the 30-year looks like on the short term. This still looks constructive, right? This doesn't look like a breakdown yet. That's something. This is what I've been noticing too across a lot of, well, at least on TLT, you're seeing a little bit of weakness, and I think it has to do with, at least the 10-year may be looking like it's breaking down, but I don't think you're seeing the same story across everything. So on the 30-year, you want to see that breaking down below 3.6. You want this to break down below here. That's going to be nice. You get that move, that's going to be very helpful, market-wise, or at least you'd imagine, the 10-year stays weak, TLT would do pretty well upon something like that happening. But yeah, we were talking about Bitcoin a second ago. I want to look at Bitcoin, see how that's been handling itself here. 19.5, so not too crazy. It is building these higher lows, right? So you have that going for it. Past couple of weeks. Higher lows on Bitcoin, past like 2 weeks or so. So let's see if that continues, and that would mean you kind of want to see it holding above 19K now. That's your pullback is essentially versus 19K on Bitcoin. You don't want to see it dropping below 19K ideally. Wow, look at silver today, guys. 8, almost 9% move to the upside. Look at that. That looks like that inverse head and shoulders is panning out on silver now. Wow, look at that big move. Look, we charted this out I think last week. And we drew this potential inverse head and shoulders, which is a bullish, reversal pattern to the upside, but that's panning out really nice. Boom, silver's up over $20 again, very fast. It's a big day there. Gold is following suit, not as big, but gold is kind of bouncing right back out of kind of a capitulation move underneath our support levels, underneath some of these recent lows from the past couple of years. And now it's snapping right back up. It's not, well up in there. You want to see gold ideally holding up in here, getting over 17K or getting over 1700 and building from there. But there's something good there, right? At least for now. Going on in gold and silver. Nat gas is down. Man, nat gas got hit pretty hard. We talked about for the past couple weeks. But oil's up a lot today. Oil's up about 4. It was up like 5.5% at one point today. This morning. And now it's come back a little bit. But oil is up a lot. Channel, at least on the channel to the downside we've been seeing. You're kind of at the top end of the channel now, roughly speaking, is your channel. So if it breaks out of this, there could be a move up into like the mid-90s. You might get something up into here on oil, back up into this kind of area that was a support. I guess I can draw a better zone here. Area that was a resistance, turn support. This would be the kind of the target level I'd have in mind on oil. If it gets above 97 and it starts to build, that's not a good, that's going to go probably too far. But if let's say it gets up to here, what does it do? Does it do this? Or is it about to do one of these and provide a really nice short back to the downside? But I think that, based off of the tightening and based off the recessionary fears, I would think this is going to be a decent risk reward for a short if we get up into the 90s, mid-90s on oil. Keep your risk though. Again, when we say like the thing is like when you say I think it's kind of a dumb thing to say, to be honest. You just it's kind of just habit. But realistically, okay, if you think it's going to work, okay, why? It's because I have a level charted out that hey, this is a prior area of support. It was a resistance back here. I think it will act as resistance again. And as long as I respect that level, it's fine. You can think all you want as long as you have reasons to back it up and you can be objective in determining that trade. So, yep, silver massive day, man. I mean, that's the biggest day we've seen in a long time on that. So something's in the water there, it seems like. Let's double check on the put call ratio here. Creeping up, nothing crazy, but here's look at this as we zoom out. This is the chart that kind of sucks to look at. Because this is like, what the hell is this? Someone looks at this chart and goes like, dude, like what the, like this is not helping me at all. This is going to show you like the individual volatility on the put call ratios, because a lot of orders sometimes come in early in the day and late in the day. So they get these big spikes early in the day and late in the day. So this chart kind of, at least evens it out, smooths it out a little bit, which is nice. So you have at least, a better view of the 5-day average of this put call ratio, which is still over 1. It's coming down the past couple of days, But we'll keep an eye on this and see if it ends up breaking down back under 1 and how far under 1 does it break down, ideally. People buying some calls. I mean, not that much, though. In the grand scheme, look at today's movement across this. Not much. I mean, you had, relatively speaking, more calls being bought than they've been the past 3 days. So today, by this number being lower. But there were days, even, last week, 26th and 27th, where we actually had a lot more call buying early on in the day relative to puts. That quickly reversed. But we had, similar looking days. We actually had more calls being bought relative at times last week. So something to keep in mind, but obviously, nothing to kind of freak out about intraday. And for those who are not aware, this tends to line up as a really good indicator, on the grand chart scheme. So weeks to months, not day to day, weeks to months. Do we see bottoms? Absolutely every time. And when the put call ratio spikes, no. But when the put call ratio spikes up to levels we haven't seen in years, or relatively speaking, we're at pretty high levels. We hit a level we haven't seen, since 2020's pandemic crash. You got to that spike, generally speaking, we've seen charts, and there have been many charts out there that you're closer to a bottom than sentiment thinks. Right, than social media would think, or than, many are calling for, right? That's all it really is telling us. Put call ratio, I like to look at the number for a number above 1. Bearish, more puts, yeah. I mean, on average, it's 0.7 is the number, roughly, is the average. But in bear markets, it's obviously going to be elevated. You'd imagine it to be elevated, as you're going to have more puts being traded than calls anyway, as traders are very active traders and you're playing more puts anyway, momentum traders. But there's also people who are, stacking up positions to, build out for the bigger picture, longer term, and stuff like that. So, as we speak, what's IWM? Let's see how strong these guys are looking. So IWM is up 2.87. So they're all about the same, to be honest. The S&P is up 2.82 right now, roughly. QQQ is up 2.6, a little bit less strength in QQQ. The Dow is up 2.85, so you're seeing the same thing across the board. Let's go to FinViz and see. I mean, pretty much, yeah. Look at this. You don't see this very often, where the Dow is up 2.86, the Nasdaq 2.48, and the S&P 2.7. They're all up around the same level. Within about 0.25%, which is pretty interesting. Let's see. So outside of this heat map, what do we got here? Tesla, the big red boy. Twitter is down today. Tesla's down. I wonder if that's any correlation with Tesla. But I mean, most of this board is all green. There's not too much notable red. Some healthcare, so not as strong. And that's kind of interesting because we've been seeing that inside of XBI a little bit. XBI is the biotech ETF. It's only up. I mean, it's only up 1%, which it's still up a decent amount, but it's nothing crazy. It was a lot stronger last week anyway than the market. Look at this chart for the biotech ETFs. It's a lot stronger last week, so maybe that's kind of reverting to some sort of a mean there in a way. But there's a little bit of red in some of those names. Johnson & Johnson's not up that much. Eli Lilly is down actually today. BMY, Bristol Myers Squibb is down today. So I guess some healthcare and drug plays are down a little bit. AbbVie's up a lot. Pfizer. Some of these names are up a decent amount, but there's a little bit more choppiness. It's not as green as everything else across the board. Oxy. I want to check out Oxy. Warren Buffett has been continuously adding into this position on Oxy. I really would love to see, and it's an idea to keep in mind too for next year or into next year. If oil continues to, if oil's downtrend continues, now this is probably going to do well if the stock market does well, I would imagine to some degree. You got a pretty nice trend line there too. But if this was to break down, right, and head down, sub $50, let's just say, because oil's just, steadily selling off into next year and whatever, this could be a decent buying opportunity on Oxy. Not to mention, you get a little dividend. It's a 0.85 dividend. If it pulls back and you get a dividend over 1, but he's been loading the boat on this thing. Mr. Buffett loading the boat. And Berkshire Hathaway. So something to keep in mind, if this thing comes down, I don't really care to buy this thing up here. I mean, come on, you're chasing Warren Buffett, you're chasing him. He's got massive time horizon on this. He doesn't care, So if you can get a better price, in my view, I'd say that's not a bad idea. You're also got this big trend line you're up at right now. Very big downtrend line that you're right at on Oxy. So, if it breaks this downtrend line and, it looks constructed to the upside, then that's a different story, I guess. You can play the momentum, but not the best buying opportunity just based off of history here, going back to 2011, And the last recession, you were essentially coming out of not really that bad, but I guess 2008, Oxy fell down to sub $40. So, maybe something like that happens again if we get a bigger crash in the markets or oil kind of comes down even further. Maybe you get a better move, and in this case, under 50 is something like that to look at. So we'll keep that in mind. APRN took a big hit today. What's up here? Blue Apron. It's a pretty big short squeeze tip. It's got a lot of shorts, right? Yeah, it took a pretty big hit. That's a massive move down. 43%. Was there some news associated with that? Let's see how many. It's got a massive short float. 52% short. Jeez. They missed revenue. They missed on revenue. They announced offering, looks like. There you go. CFO is departing for a role somewhere else. The CFO resigned, not the best news, I would imagine, coming out of them right now. But since the stock was popping up and they got some volume, they take advantage to keep themselves alive, take advantage and do an offering. Let's take a look at this offering, right? They entered an agreement to sell up to $15 million of shares or whatever the hell stupid Market Watch blocks with a paywall. It's like, okay, of course. But they have an offering news, which is not ideal. And they miss earnings. But, we'll see how it kind of shakes out. Be careful because, it could kind of bleed for a while. But if it shakes out and kind of builds a higher low, builds up over this, holds $3 or holds 275, something like that, that could be a spot to risk it off of, key spot to keep in mind. It's been a volatile name for sure. And the amount of shorts in that stock, you're looking at the stock too, like just because it's down doesn't necessarily mean that it's like, oh, it's done. With this short flow, it's a lot of shorts. You get into like a little bit of a risk on environment, let's say in the next couple months at some point, like we kind of saw, late July and August, you go a little bit risk on in the market. Oh man. You'll get squeezers across the board, and Blue Apron can be one of those stocks. That's a pretty popular, short squeeze candidate. So not a bad idea. So on edge, up nicely, moving. Yeah, that's how it kind of feels, I guess. But I was kind of surprised at not being up more. But then I was like, I guess the VIX is down a decent amount, which is kind of why. So this guy, SPY has come back a little, pulling back. So you're getting a little bit of a pullback. You got 5 minutes to go into the close. Some sellers coming in now. Some people taking profits, locking some gains, whatever you want to call it. TLT, a little bounce into the close, a little bit off that 103.15 area. Apple's up 3% on the day, pulling back, getting some selling pressure. So there's that flag. We're looking at that flag, and it ended up breaking to the downside. So there was probably a scalp. There probably just was the past 5 minutes a scalp opportunity on Apple. Let's check back in here. Check back into my friends over at Affirm. What do we got in Affirm? Pulling back a little bit, but I'm not gonna buy any more. I'm gonna leave what I have for now. And then, I don't really think there's a need to buy much more of this thing. Maybe if you like it tomorrow or Wednesday, if it comes down sub 19, maybe. But the bigger picture on the firm is this downtrend. You're looking for a downtrend break, and we're looking for a downtrend break and a target of looks like 2150 versus a risk of about 1825. Today's lows 1836. So yeah, I would say 1835 or 1825 is the spot. And you could give it down to that level, give it a little bit of a leash, and let it close the day, or less, give it to the end of the day if it breaks below. Because you've seen wick opportunities where the thing opens up lower and then has a massive launch that day. So be careful, because we can get something like that. That's something to keep in mind. So, on the play like that, I like to give it a little bit of a leash. But obviously, if we are trending down towards the daily close, looking like it's going to be under that low, then I'm not going to hold that. Not going to hold if that's the case. All right, we're just chilling here now. 2 minutes, a couple minutes to go into the close. QQQ. Yeah, everything's come back a little bit. Look at that Qs, by the way, hitting up to the highs of Friday and then getting rejected to the same exact spot. Look at that. Could have been a nice little trade there. Boom, look at that. Perfect. It was like a freaking quad top. You had like 5 candles topping out that same spot, couldn't break above. That was your signal. And that, if you were watching that just now, that would have been a nice, boom. Take puts there. Easy risk. If it breaks the high of the day, out. Easy risk reward for a flush down, and there's a flush down. We got to play this. We got to get the small account going, man. We got to get that. We had a nice win today, but I got to start stacking the win rate to be I got to get the win rate up a little bit higher, because it's been chopping. It's been too choppy, and I've been finding to let things wait, not play anything relatively close to the open. Let things play out, give it time, and there's usually better setups. Honestly, I've been finding midday and even the afternoon has honestly been cleaner setups, less choppiness, less kind of ups and downs, and fake out moves and pulling below VWAP, stopping you out, and then ripping back to the upside. Less stuff like that. A little bit cleaner price action and all that good stuff. So that's what I've been finding. But I guess it's going to take time. It's going to, this will change. There'll be times where maybe the morning's the best and not the afternoon. It depends on what you're looking for and how you see things, I guess, at the end of the day. Healthy pullback. Yeah, I think so. I mean, I don't think it's a like devastatingly, massive pull. This is a normal pullback to see. The question is going to be tomorrow is, can we break some of these highs? Can we break, this on QQQ, this 275? Can we break the 275 on the Qs? On SPY, can we break this 370? You got to 368.60 today. Can you break the 370 tomorrow? That's going to be key. We got above that, was a fake out move, and now can we break that this week? It doesn't have to be tomorrow. Break it this week, and if you do, I think a lot of shorts are going to start piling in up into here, right? As a trade opportunity, and it might be a good intraday opportunity, but if you break through that, that could be the next little, squeeze out rally you have, a move maybe up to that 380. Some shorts will probably start piling in here. And if that breaks, eventually some shorts will start piling up in here. I am skeptical of having of a move to 390s prior to next Thursday. Next Thursday is CPI. It could happen. That would be a pretty big move. So let's just keep that in mind. I don't know if we're going to get that prior to next Thursday. It could though. I mean, I guess if you have, a couple 2% rally days, from where we're at now on SPY to 390, it's only about 6%. So yeah, I guess it could happen. 6% is not that crazy. It could do that. But I would imagine you probably need to see some sort of catalyst, bonds coming down, yields coming down. Something's got to kind of give to give us any of that indication, into CPI. Need something to happen. Yeah, either it's got to flush through, or I think a lot of people everyone was looking today for the flush type of trade. Everyone was looking for this, like after this weekend, everyone's like, oh my God, the flush is coming and it's going to be bad and it's going to be horrible and market's going to crash on Monday, and we didn't get it. What do we get? We got a 2.5% rally day is what we got. So we're kind of still in this little, downtrending range until proven otherwise. So let's see. You can kind of draw this in. Here's your lower lows. Lower highs, not as easy to see, but so far you kind of got this is your trend or your rough range to the downside for now. Until that really breaks, you got to break the 370 and make a push, fill that gap to 374, and then we can start talking at that point about what's next, right? But let's kind of cross that bridge when we get there. With that said, that's it. That's the day, man. The market's closed, and kind of a boring afternoon, to be honest. We had that Affirm play. Well, let's see how that plays out. but we're going to risk the lows. I'll kind of recover that play. I'm going to get rid of some of these lines. We're going to risk the lows for a trade, and this is going to be a trade that we're looking to take off prior to CPI. I'm not going to hold it through CPI. It's a gamble and a half. Could it be a massive move after CPI? Yeah. But the thing that I see about honestly anything, is that post CPI, there's going to be meat on the bone. So who cares? Like, there'll be plenty of meat on the bone post CPI, So I don't think it's a big deal to think that, oh my God, I got to get in before the CPI, long or short, and guess. It's a gamble. Wait till after the CPI, you're going to have a cleaner move, So we'll see, but that's the idea. So that is the look into the end of the day. And with that said, I'm going to wrap things up. Again, there'll be a link to that Discord in the pinned comment of the chat. Also, I'll link it up in the description box as well. But there also is a link on the community tab of the channel. So if you're new, subscribe to the channel, hit the thumbs up button. I appreciate you guys for doing so. But then also, Discord's free. It's going to be free. That's the whole point of it. I want it to be a free place for us to hang out after hours and stuff like that. So stay tuned. We'll kind of be, I'm going to probably be more active in there towards like the end of the day and the evenings and the nights and the weekends. Mornings / like midday, probably not going to be very active in there. Just, I don't want to say it's a warning, but it just is something to keep in mind. So, but yeah, DM me there. You can DM me wherever, honestly, Instagram, whatever. You can DM me. I don't really care. It doesn't matter, but it's another place to kind of talk about stuff, and hopefully you can kind of meet, and maybe you meet someone else in there that, you never would have been able to meet otherwise. That's the idea. Thanks so much for watching, guys. And I will see you on Wednesday's stream or at some point in the future. Peace out.